Okay, good morning, everybody. Morning, depending on where you're located at, but I assume a lot of you are from California. We are going to be, I'm really excited about today's topic because I think it is so relevant to what is happening, what the needs that a lot of people have right now as far as being able to buy and sell real estate the most efficient way, right? We want to do the easiest way and take a lot of the guesswork out of it. My name is Scott Fuller. I'll be your host today. I'm the founder of leavingthebayarea.com, also leavingsocal.com, California real estate broker of 22 years. And like I said, I'm really excited about today's topic. If you've ever found yourself in a situation, or maybe if you're in the situation right now that you want to make a move, whether it's staying in California, whether it's going outside of California to a different state, but you need the money from your existing home, you need the equity to be able to use that to purchase your next home. You're not sure how to put all that together. Well, we have the solution for you. And that's what we're going to be talking about today with my partners, Jon and Leslie Foster with the J&L Real Estate Group of eXp Realty. So Jon, Leslie, thank you guys so much for joining us today. Look forward to some great information. And why don't you guys give us kind of a background of who you are and, what you do for your clients, and we'll start from there.
Thank you very much for having us, Scott. It's been fun being your friend and your business partner for many years now, and being able to be a trusted advisor with the service that you've been offering to so many people. We've had a lot of people that are moving out of California that you have advised and helped and given advice as to certain areas they may want to consider. And we've been honored to assist many of those folks on having a successful exit. So thank you for that, and thanks for having us today. This is my 19th year being licensed. Our physical office is located here in Castro Valley, California, in Alameda County, and we service really all of Alameda and Contra Costa County. I know we're here to talk about the trade-in program, but just a little bit about us. I just want to tell everyone where we're located and years in business, and turn it over to Leslie here for a minute.
Hi, everybody. I'm Leslie Foster. Been in real estate for 16 years. Jon and I have always been a husband-wife team, and recently expanded a little bit larger this year, which is exciting. And so we are, like Jon said, servicing all of Contra Costa and Alameda County, and really helping sellers get their home ready, top dollar, selling it for them, and making sure that we've got a plan in place. And so I'm really excited to talk to you guys about HomeLight as well, and how it can really help you be prepared when you do find that perfect house and all your money is locked up in your home, all the equity. So we're excited to talk to you about it today.
Awesome. Let's get the solution going. So Jon and Leslie, as you mentioned, you guys service most areas of the East Bay. Just want to let everybody know, you might be watching this from the peninsula. You might be in Sacramento. You might be somewhere else. The program we're talking about is a HomeLight trade-in program, and you have to be a certified agent to be able to work with HomeLight on this particular type of program. Obviously, Jon and Leslie are both certified. If you're located in other areas, all of our local real estate listing partners are certified in this program, but I chose Jon and Leslie because I think they're great presenters, and they'll do justice to the program to see how it can help you guys out. Also, a couple housekeeping items. If you have any questions, we're going to try to cover as much content as we can and get everybody out of here within 1 hour. But if you have any questions, we've got a Q&A box. Go ahead and type it in there. If you type it in, we'll answer it live. Also, there's a chat box that you can use as well for that. We are recording this. So if you find that you have to jump off early for some reason, or if you know of somebody, if you found some value in this and said, hey, you know what, I have a friend or maybe a family member who might be interested in learning about this, you can always email us at info@leavingthebayarea.com. info@leavingthebayarea.com. We would be happy to send you over a recorded copy of this. So sharing is caring. Please go ahead and feel free to do that for us. So, okay. So we've kind of set, the idea of, okay, if you're looking to move somewhere else, you need to use the equity. You don't want to, try to do a home equity line of credit. You don't want to try to change the financing on your property, but you need that money to buy the next home. Why don't you guys start us off and tell us how this trade-in program works?
Sure. I can just break it down just real quick, step by step, and we can expand as needed, Scott. That's no problem. So how it works is you're going to get a purchase price from your home, which is a full market value. I always want to make sure to say that first. This is not a discount offer that's being made on your home by HomeLight. This is a full market value of your home, allowing you to tap into all that equity that you've built. The next thing is you're going to be approved basically for their trade-in program. at that full market value. It'll be in writing with a contract from HomeLight. That now puts you in a position to go out and make offers with your real estate agent on your replacement home without first having to prep your home, stage your home, make repairs, whatever the case may be. You can go out and that would truly be the next step, Scott, is to go out with your realtor and start touring properties that you're interested in purchasing and go out and start making offers. The next thing is you'll be able to negotiate the closing date, which is pretty typical of around 30 days in most cases, but really moving on your schedule. And the next phase of it, I'll kind of turn it over to Leslie after in fact, we just closed one on Monday. That family is now moving into their replacement home. And Leslie, do you want to talk about what's happening with their home right now, the one that we're getting ready to sell?
Yeah, absolutely. So we found a home, a really great friend of mine. We actually had a house here. She's like, I think this is the house. I really want it. I'm like, okay, well, how are we going to make this work? Let's talk to HomeLight. And so what we were able to do was she was able to get her home purchased by HomeLight. And like John said, they gave her a full price offer and they were able to close on her dream home here in Castro Valley this past yesterday, actually. And so during the interim, we have been prepping her home for sale. She's been packing. They've got 2 small children. Their house is a disaster. So there was no way we were able to do a contingent offer about her selling her home and get her the value that her home deserves, because her husband works from home, she works from home, and they have 2 small kids, and it's just chaos. So they've been slowly packing. We've been in the interim getting bids to get painting done. The yard had to be cleaned up. So we had a gardener there yesterday cleaning up the yards. We've been able to get all the reports and all the disclosures. So once they move out here this weekend, we are literally going to go in, finish the painting, get all the staging done, photography, and we'll have their home on the market within 7 days and ready to go. And they're not going to be inconvenienced at all, which is fantastic. I don't have to set a calendar. Can I please show your house at 2:00 on a Tuesday afternoon? They're not living there. So their home will be vacant. It will be staged. It will look its best. And the stage homes obviously do sell for higher price because it's the way that a house should be. There's not pictures on the walls. People can envision what the space should be used for. Sometimes when we're living in a home, a dining room gets turned into a home office. And so people have a really hard time figuring out, well, where do I put my table? Could I eat in the kitchen? So I'm really excited for them that, they're not going to be inconvenienced and we're going to be able to get them more money because the home will be vacant and staged and ready to go.
And one thing to point out, Leslie, that you mentioned is you're able to write a non-contingent offer for your client. And so what some sellers are trying to do is they're trying to say, well, I'm going to put my home on the market or be ready to put it on the market. And I'm going to start writing offers on a property that's contingent on my home selling. Let's be honest, the real estate market is very dynamic. It's very aggressive. There's a lot of competition. So, getting an offer accepted on a new home contingent on selling your home is very, very difficult. It's not putting you in the driver's seat in a good position to have a successful outcome. So I think that's really one of the strong, outcomes of this. John, let's talk about some more. We'll get in a little more detail on kind of how the process works, but let's talk about some of the benefits that you're seeing, for your clients and for our clients on using this program versus not using this program.
Yeah, absolutely, Scott. And the family that Leslie's been describing that we've been helping here, this entire process really, to be honest, would not have been possible for them at all without this HomeLight trade-in program. They were just, bursting at the seams, not enough space for their growing family, putting their home in a state that really was not making it marketable. So to your point, Scott, about how competitive and dynamic this market is. I mean, here in the San Francisco Bay Area, if we're not the most competitive market in the entire country, we're probably top 3. I mean, it's tough. And so buyers having a tool like HomeLight trade-in to be able to be successful as a buyer, because in this case, it's a move up, right? So they have a home to sell and they're also a buyer. So they're a seller and a buyer, they're both. Having access to this tool to answer your question on the benefit, this move would really not have been possible for them without it. It just wouldn't have been logistically, timing, presentation of their home. It would have been a daunting task to try to accomplish this without that trade-in program.
And
I think also, go ahead, Leslie.
I was going to say, and on the flip side, there were 3 other offers on the property that were all non-contingent. So even if we would have tried to be a contingent seller, we would have never had a shot because right now the market is still pretty competitive. And a lot of offers that are being submitted have no contingencies. So even if we removed our loan and appraisal and all that other, we still have that contingency of them selling their house. And unfortunately, you just can't be competitive with that contingency in place right now.
Absolutely. And a lot of what I've seen historically is people will say, okay, maybe what I'll try to do is I'll try to buy the property, get qualified to be able to purchase my next property without selling my existing property. In a lot of cases, depending on what your financial situation is, that might work. But in some cases, you're thinking, okay, well, I'm just going to buy a property that I can qualify for, since I essentially am going to have 2 mortgages that I'm being qualified on and all my equity's locked up. So I'm going to buy my next property. I'm going to be forced to buy something that might have been a lot lower in my price range than I wanted. And it wasn't the ideal property, but it's something that it worked, right? Because I was able to go ahead and, buy something without selling my home. So this alleviates that. It also alleviates a double move. You don't have to move something into storage for a period of time. Once you sold your home, now you have your equity, you're liquid, but you've got to, move into something temporary while you're shopping for your next home. So it avoids a lot of the inconvenience, of course, but a lot of the added extra costs of transportation, storage, different things like that. So obviously it kind of provides a solution for that as well.
Yep.
That's a great point, Scott. With the double move, that is a significant consideration. You're absolutely right. Because the flip side, if they are trying to do it the, I guess, quote unquote, traditional way, as you know, Scott, a lot of these sellers are renting storage facilities. Then it's the move from the house to the storage facility. That's one leg. And then the next leg from the storage facility to the new home. It's a significant cost.
Well, and also, where are you going to live in the meantime, right? So then you're in a position where, okay, well, we've got to find somewhere temporary to land, which typically ends up being like a furnished, Airbnb, VRBO rental for a month or 2 or something like that. And those costs are astronomical. So you're thinking, I want to take advantage of those type of vacation rentals, but only if I'm going on vacation, not as a means to an end to get from point A to point B. So let's break down a little bit more into detail, John, about how the process works, how long. Let's say if I come to you as a client, John, and I say, I'm interested in doing this. What are the first steps? How long does it take to get approved? And what are the steps involved in doing that?
Let me answer this.
Go ahead, Leslie.
Okay, so if you are considering purchasing a home, I just say get pre-approved. It doesn't cost you anything to get pre-approved with HomeLight. The process does take about a week and a half. And what I found is I'm working with clients that they're in the situation where they might be able to pull it off, but they're not quite sure. And then we find the home they absolutely love, and we've got 3 days until offers are due. So if you are thinking that this is an opportunity where you are considering buying a bigger home or moving out of California, I say just get pre-approved with HomeLight. What will happen is you will do a Zoom with the HomeLight rep and your agent. They will basically go through the process with you. And at the end, you decide, yes, this makes sense for me. I like the peace of mind and I'm not committed to it. They're going to do all the inspections, which take about a week, which are free. So if you do decide to, if you don't use HomeLight, you still get the reports for free. So you save yourself about, $1,000 to $1,500.
Oh, at least, sure.
Which is fantastic. And then you have the approval. So even if you don't find your dream home or you decide, we're really happy, we're just going to remodel, it's no sweat off your back. It doesn't cost you anything. It always happens when you put it off and then you find the house you love. And then you're like, oh man. And John and I have made it. We've been able to put some together in a couple of days, really push, which has been fantastic. We had a couple that they're like, we love this house. We're like, oh, why didn't we do the call 2 weeks ago? Like when we mentioned it, but that's neither here nor there, but we were able to pull it off and get the approval in 3 days. It does take work on both ends, but it is totally worth it. So you do a Zoom call, and then you'll go sit after the reports. You'll go through the reports with the HomeLight rep, and then you kind of go through the costs and all that, which is fantastic. And then you have it. If it makes sense, great. If it doesn't make sense, then you don't use it.
It didn't cost you anything.
Doesn't
and one thing this reminds me of, Leslie, is that if people who have tried to buy a house in a competitive market, it's kind of like just getting pre-approved for a loan, right?
Exactly.
People say, "Hey, I want to buy a house. Maybe I'm a first-time home buyer, or something like that. I'm not real serious, but I'm just going to go kind of start looking around." You start going to open houses, and that you find a house that you absolutely love. I want to buy this house. Do you have an approval? No. Okay, well, unfortunately, the property is going to go into contract before you have time to get approved. So it's just like that, just like you would get a pre-approval letter. You don't have to use it if you don't want to. There's no cost involved, but this is a pre-approval for this type of program. How long is, let's say, for example, if I was to get approved with the program and either I don't have a lot of time to look for property or I just haven't found the right property yet. How long is the approval good for?
I believe it's 3 to 6 months. I'd have to double check.
I know it's 3 months for sure. And if anything, Scott, it's very similar to updating a pre-approval where HomeLight may ask for some additional comparables or recent comparables to update the sale price. But it's typically good for 3 months. Getting an extension on that is really simple.
Yeah.
So just update some of the financials, some of the numbers. HomeLight wants to make sure the value is still there, right? I mean, your house hasn't fallen down, something significant hasn't happened. The value is still there. So let's say, for example, myself as Mr. Homeowner, I've got the HomeLight approval. I'm ready to go, start shopping. I find a property that I want to put an offer in on, right? And I'm working with an agent to put that offer in on. They put the offer, obviously they're writing the offer, not contingent on my home selling because we have this guaranteed offer from HomeLight to purchase my property. What are the next steps from there to the point that I close escrow on my new home?
Mm-hmm. That question comes up all the time. So I've found my new home. I've gotten my offer accepted. When does HomeLight buy my home? What is the timing of that?
At this point, HomeLight hasn't bought your home yet. They've just given you a guarantee that they will, right?
Correct.
So just to clarify that, yeah.
That's correct. They've given you a written guarantee. It is in writing. That makes everybody feel comfortable. When do they actually purchase the home? So it is 2 days prior to you closing on your replacement home. It's a really well thought out process. And the reason it's just 2 days prior than that you are closing on your replacement property is it's going to minimize carrying costs. I know we're probably not getting into a real detailed breakdown, but I mean, you basically have a 60-day window after HomeLight purchases your home to then resell it on the open market to an end user buyer. So by them closing 2 days before, really in theory, you don't need the equity any sooner than that. So it's a very efficient process. They're going to close escrow on your home, transfer the funds to the escrow on your replacement property. And then from there, like Leslie said, this family we're working with right now, we've been doing a lot of the home prep work prior to that so that we are ready for the market. Sure. Usually we like to go on the market within about a week of HomeLight buying your home. So we've done a lot of the legwork in advance, the painting, the landscaping, we've got the stager lined up, things like that. And then in our market, typically we're going to be able to get the home under contract with the end user buyer, usually within 7 to 14 days of hitting the market.
Yeah. So at that point, it's just pretty much a traditional sale, right? Except but the difference is you've already moved into your new home and your agent is going to be getting the home prepped to put on the market and listing it just like they would on the MLS, just a standard listing, right?
Standard listing.
Yeah.
Yeah.
Okay. We've got a couple of questions. Robert asks, has a home in Tiburon, recently made an offer. Robert, I will connect with you offline. And we do have a partner who's fantastic, who services Tiburon, and we can talk in a little bit more detail about what your strategy would look like. But absolutely, Jerry asks, what impact do pre-approvals have on a credit rating? Jerry, I'm assuming you're not talking about a mortgage pre-approval. I'm assuming you're talking about a HomeLight pre-approval. So do you guys want to answer that one?
Yeah, there is no credit check on the HomeLight end to approve your home for trade-in. They're looking at really, I would say, 3 things. I mean, they're looking at the valuation recommendation from the real estate agent, so that if you're working with Leslie and I or your local agent, we would provide a comparative market analysis. They do want to know the equity position you have in your home, and they want to make sure that that equity position is going to be enough of a down payment to get you to your next destination. In almost every single case we've seen, it is. Most homeowners in California do have a pretty sizable equity position. And lastly, they're going to ask for, I think, about 15 or 20 photos of the interior and exterior of your home to be uploaded to their website. That goes to their underwriting team. They may have some questions for Leslie and I on the real estate side. They have some questions for the homeowner side. and that underwriting team will process that request in about a week and come back to you with an approval in writing with the guaranteed price that they'll purchase your home for.
Yeah. And so Jerry, again, if you're not talking about a mortgage approval, there's not going to be any credit pulls, no hit on your credit. Let's talk about, some people might say, okay, I have enough equity in my home that once I, that I can purchase something cash. Maybe you own in California, you're moving to the great state of Arizona. I'm biased, but you can buy something cash, your next destination, so you don't need financing. That's pretty cut and dry, I would imagine. But what happens if somebody says, well, maybe I've got a couple $100,000 that I'm going to unlock that I want to use from the equity of my property, but I'm still going to need a loan to do standard financing when I purchase my next home. How does that work in this type of scenario?
Yep, that's a great question. And that's pretty common. Especially for a move-up buyer, a lot of those replacement properties are excess of $1 million, $2 million. Buyers are going to want to get a loan to secure that replacement home. When HomeLight purchases their home 2 days prior to the close of escrow date on the replacement home, that will then unlock the equity out of that home. So no different than if you had sold the home a month ago. I mean, you're going to have access to that equity right when you need it to be able to then be used as the down payment. And at that point, you're already fully underwritten with your lender, whether it's HomeLight Home Loans or your own lender that you're working with, to be able to instantly gain access to that down payment that immediately goes to the escrow account of your replacement property and close escrow on the new home. So it's in that regard very similar to a traditional sale, the way it feels and the way the logistics of it work.
Yeah. It's very streamlined. Like you said, HomeLight, when they purchase your property, they're going to wire the funds over to the escrow company that's handling the transaction for the new home that you're purchasing, right? So it's very streamlined, it's very efficient in the way that it processes.
It really is. It really is.
Yeah. Let's talk about, is there anything that we've missed, guys, on the process itself, or anybody has questions, please type them in on the process. Obviously, our goal is to provide kind of an overview, but everybody's situation is going to be very unique. And so if you have questions, about your situation, obviously we would get you in touch with John and Leslie if you're in the East Bay, or if you're in a different area, we get you in touch with our other partners to kind of, really do a deep dive into your strategy. Anything that we've missed, guys, on the process?
A question that we get a lot is who decides on the offers that come in, right? Because HomeLight has purchased your home, right? So Untitled, HomeLight is the legal owner. And the great answer to that, this is not my answer, but this is how the HomeLight trade-in agreement is written, is that you, the homeowner, yes, you've sold your home, you're no longer the seller, but HomeLight wants you to be involved with your agent in the selection of the offer, which is great. So their trade-in agreement allows you to fully participate in the offer selection process as if you still owned the home with your real estate agent. So a lot of homeowners really like that. And that's a good thing. It's exciting to be involved in that offer process, to work with your realtor. Let's say you end up with 5 offers, to really understand the price and terms and the benefits or challenges of each offer, work through that with your realtor, and ultimately select the best one. Once that offer is selected, we simply want to notify our rep at HomeLight. This is the offer that the seller has selected, and we'd like to move forward with it. So we get that question a lot.
Okay, perfect. We had somebody ask for your contact information, which I just sent over to them. Okay. Let's talk about, because a lot of people, when they're looking at something where it's like, you're getting a guaranteed offer, you're getting a cash offer. In a lot of cases, it's an investor who's going to come in and say, hey, look, I'll buy your house, right? Cash, I'll close in maybe 10 days and I'll let you stay in the place for like 30 to 60 days, which sounds like a great offer. But obviously, for the financials to make sense for them to do something like that, they're going to come in usually at 70, 75, maybe 80% of market value. Mm-hmm. Can you reiterate again? Are you getting a full price? Are you selling at full price and getting all the money, or is there, how does that work as far as, what a fee might be involved in this, or if you're, leaving money on the table, because they have to resell it? Does that make sense?
It does. And that's a great question. So the best thing to do to really, because HomeLight does a great job when we set up the initial Zoom consultation of breaking down every single component in pretty good detail with the person that's considering using their trade-in program. But to answer your question directly, Scott, it is definitely, and this is why Leslie and I really love promoting HomeLight trade-in, is it is a full market value offer on your home. So let's say your home's worth $2 million. HomeLight will buy it for $2 million. Now, to your question, there's some of the logistics and the details behind that. When that escrow closing takes place 2 days before your replacement home escrow needs to close, HomeLight does keep a 10% holdback. So it's still a full market value offer, but a 10% holdback of the equity position for any agreed upon upfront repairs, home prep work, staging, things like that. And then once the home sells, let's say that HomeLight purchased it for $2 million. And if Leslie and I in this situation were the listing agents representing you when we listed on the open market, and we end up selling it for 2.1 million, that's 100,000 higher than HomeLight purchased your home for.
Yep.
That delta in your favor does go to you, the homeowner. It's great. HomeLight doesn't get to keep that. On the flip side, we always want to look at devil's advocate and what if. HomeLight bought your home for 2 million. It ultimately sold, for whatever reason, 1.9 million, 100,000 below. That's just going to eat into that holdback that HomeLight hung on to, and you would get less of what HomeLight calls a second check, which would happen where that second check would occur after the end user buyer purchases your home. The upside, in my humble opinion, for the person that has agreed to do this HomeLight trade-in, if there's some catastrophe that, Scott, Leslie, I don't know what that would be at the moment, but the market caved in 40%, HomeLight is assuming all that risk.
Yeah.
And you've got 90% of that full market value at the time that was agreed upon. You receive that. HomeLight, if they got nothing or lost money, that is the risk that HomeLight assumes.
Yeah, and usually, companies like HomeLight are going to be a little bit conservative on their initial valuation, but keep in mind that what you're getting is what the market is willing to pay for your home.
Yep.
Regardless of what HomeLight, came up with or anything like that. Your home is going to sell what your home is going to sell for based off of what willing and qualified buyers are willing to pay for it. So there really is, there's no risk involved in, kind of the process and the way that goes through. Let's talk about, again, if anybody has any questions, please throw them in one of the Q&A or the chat window. Jon, you kind of mentioned like market conditions. Now, I do want to spend a couple of minutes or maybe even 10 minutes or so on what's going on in the market. The market has been insane, as most people have known. If you own a property, you've been in a really good position. And if you're trying to get into a property, it's probably, maybe there's been a little bit of challenges. What are you seeing right now in the last couple of months? And are we seeing any changes in the market with the, rising of interest rates and things like that? And what's your take, what you might expect to see over the next 6 months or so?
Yeah, no, I appreciate that, Scott. And I know that you and I study market trends and we read data reports all the time and study these data points. And Scott, if you agree with me, I think it is absolutely safe to say we are in the midst of a transitioning real estate market at this time being driven by the interest rate situation.
Sure.
I think we've got a majority consensus that truly is the case. Leslie and I are working in this business daily, very active in our local market. We can confirm we're feeling that. And here's what we know from the Fed. They've told us publicly they will continue to raise interest rates, not only through the end of this year, but going into 2023. So all we can do is react to the market conditions that are presented or given to us and do the best job that we can. We are very fortunate here in the Bay Area that even though we're dealing with some interest rate challenges at this point, it's our job to find solutions. So there's a lot of things we can still do to keep this market moving forward, to help buyers and help sellers. There's interest rate buy downs that sellers can offer buyers that actually still get them a great price for their home, but it also gives the buyer a small credit, maybe it's 1% or whatever it is, to get that rate bought down to a quote unquote more normal or lower level to what they were accustomed to. that's a true win-win for a buyer and a seller.
Mhm.
But not to get too deep on interest rates, overall, we've got a low inventory environment still. We still have historically low interest rates. And on top of that, we still don't have the housing supply to meet the buyer demand. So it's much more becoming a more well-balanced market where buyers are dealing with, not in every situation, but typically less offers per property than we saw 6 months ago. If you had a home that had 10 offers, it might get 2 or 3. So it's a little bit easier for buyers to compete now. For sellers, if we know that the interest rates, because the Fed has told us, will continue to be increased, the federal funds rate, we might just consider that it could put more downward pressure on home values. I don't have a crystal ball, but if a buyer's payment is higher, it's going to reduce their buying power. And ultimately, there's got to be some give and take there. And I believe it's going to be in the form of, I think the soft approach is less of a premium that sellers will be getting. If it becomes a little bit more aggressive reaction, it's going to be a little bit downward pressure on home values.
Yeah, I agree, John. And I think that, today is May 4th. May the 4th be with you. I'm gonna throw that out there. It's so dorky, but it's funny. But yeah, right before we started this call, there was an announcement that the Feds were going to raise it by a half a point. They haven't done that in 20 years, over 20 years. And so we are going to see very aggressive Fed policy. And as you guys know, and some people do or may not know, when the Fed raises rates, they're raising the overnight lending rate, right, to banks and things like that. But there is a trailing impact on mortgage rates, right, which could be 30, 60 days beyond where it starts to impact the mortgage rates. What we do know is that mortgage rates are going to continue to go up. And like you said, John, that definitely impacts people's purchasing power. If you have a percent increase in rate, let's say 3.5% on a 30-year fix versus 4.5%, depending on what your loan amount is, that can impact you $500 to $1,000 a month. So you start to see people not be able to qualify. So, we always say it's a good time to, to buy and sell real estate, but the reality is if you are looking to make a move and sell your home and you have the flexibility and the ability to do something sooner than later, if you can lock in what we know today's price is, go for it, because a lot of people, especially on the lower end, are starting to be priced out of the market because they can't afford the payments. And, I think most markets, John, mimic what you just said.
Yeah.
There's still a lack of inventory. Material costs and labor costs are still very high. It costs a lot to build new homes. And so resale homes continue to keep their value. But we're going to see a downward, pressure on increasing pricing. So does it mean that we're going to hit a bubble? I don't think so. Absolutely not. But it does mean that, the increases we've seen in a lot of markets, 15, 20% annually, are certainly going to be pressured down, quite a bit.
Yeah.
We have a question here. You mentioned that using the program requires a certified agent. Is that on both ends, meaning the selling agent for the home you wish to buy also requires program certification? Excellent question.
Mm-hmm.
Go ahead, guys.
It's an excellent question. If you're making a move locally, it's just logistically going to be much simpler to deal with the same agent representing you on the sale and the replacement property. Scott deals with a lot of people that are not purchasing replacement property locally. They're buying out of state. So the answer to the question is no. The agent that's representing you on the purchase side, your buyer's agent, does not have to be certified with the Home Light program.
Yeah. And there's there's quite a few agents. This isn't a newer program, but it's exclusive in the sense that there's only, like we said, a certain amount of agents who are familiar with it, and Home Light is based out of San Francisco, so we use it a lot in San Francisco. What we always do is we'll make the introduction, to the agent who's going to be representing you as the buyer, to say, hey, here's an overview of what we're doing for the seller. You don't really have to know anything about it. You don't have to get certified. You don't even have to know the names, Home Light trade-in, but we're just going to tell you what the expectation is. They're going to write the offer just like they'd write a normal offer. They don't, they just need like the really high level details. They don't need to be well versed in the program or be certified. So thank you for that question.
Mm-hmm.
One other question that we have from Robert: what if I had a recent appraisal on my property? And I'm assuming he means, will HomeLight use that appraisal?
That's great. The answer to that is that absolutely would be considered. We would send that to the HomeLight trade-in underwriting team. And also, if that appraisal, if we were looking at your property, Leslie and I, we would absolutely want to take a look at that and factor that into our own market analysis report. The goal is to definitely get you the highest value we possibly can for your home. And the great part, like Scott mentioned earlier about the trade-in program, is you're going to get a true market value offer from HomeLight. And then once it hits the open market, if, and again, it's vacant and staged at that point too, which is giving your home every possible option to receive a premium price, and it's over the amount that HomeLight paid you, that difference in your favor would go to you at the time of sale, which is great.
Yeah. We've had a few people pop on in the last few minutes. So again, if you hopped on late, we will have this, it is being recorded. We'll have it available to send over to you. Just send over an email to info@leavingthebayarea.com. We'll make sure you get a copy of that. Another question that we have, is there a difference in how the program works if you wish to buy new construction, meaning a home that's under construction or that will be constructed, versus resale? Does it make a difference?
It doesn't. And that's the beauty of the trade-in program. So the new construction, it can be a moving target a little bit, right? As when the builder is
100%.
actually finished with the home.
Yeah.
That's what's great about HomeLight. So whenever that new home is ready, HomeLight's just going to close on your home 2 days prior. So there's really no difference.
And you're right, John. I mean, that's where it really comes in. You know, the convenience comes in for that, because the moving target for new construction can be 1 to 3 months in some cases. And, you know, usually you're not going to know until sometimes 30 days, maybe 45 days ahead of time. Okay, here's our absolute, you know, final completion date, you know, certification of occupancy, whatnot. So that helps a lot in when you're not really sure when it's going to close and when you're going to need funds available to close on that that new home. Thank you for that question. Okay, so anything else that guys that we've missed? We talked about the HomeLight program. We've talked about kind of what we're expecting in the market. Anything that we've missed? I think we've covered quite a bit.
A lot of great questions.
A lot of great questions. Absolutely.
And, you know, Scott, I think that it's just something it's an option that I would encourage someone who thinks it might be a good fit for them just to explore it. There's no obligation, there's no cost, there's no downside to just checking the program out at a little bit deeper level. As realtors that want to do a good job for our clients, we want to give them all the tools that they need to be successful. It's challenging. This is one of the solutions that we've been able to really place a lot of value in, because we've done several of these transactions. And I mean, I guess maybe seeing is believing, but, you know, and the first one that we did a long time ago was a little scary, but I mean, it worked well and we kept promoting it, and we've been promoting it a lot now. And it's a great tool for somebody who thinks that it could be something that could enable them to get to their next destination.
Absolutely. We're taking a look at, you know, and we understand there's not one tool or solution for everybody, but, you know, to kind of just have the conversation and see, would this work for us, for our situation, what we're looking to accomplish. So, okay, guys. Well, thank you everybody for joining us today. Hope you got some great info on this. Again, if you'd like a copy of the recording, or if you just have any questions, whether it's for myself, John, or Leslie, or if you'd like to talk with one of our local partners in your area in more detail, have a sit down and really kind of get a better understanding. We'd love to help you out with that. info@leavingthebayarea.com. John and Leslie, thank you so much for your valued partnership, for joining us today. It's been great information. I appreciate it.
Thank you for having us, Scott.
All right. Take care.
Bye.
So much.
See you next time.